Volatility in the British pound surges after BoE members share their outlook for monetary policy. As you probably noticed, volatility has surged lately as Bank of England members such as Haldane and Bank Governor Mark Carney share their outlook for monetary policy. Now, this volatility is set to continue with Kristen Forbes set to speak at the London Business School at 7 p.m. London time today. Chris Salmon as well is set to speak at midday, but it's unlikely that he will share any direct comments about monetary policy given the event he's attending. As well, we know that the Bank of England will not be sharing the text from his speech. Now, so what caused the surge we saw yesterday in the pound versus the USD? Well, Haldane said that a partial withdrawal of August 2016 stimulus would be prudent moving into the second half of 2017 if the data comes in as suspected. He also said that a withdrawal of stimulus would be a sign of MPC confidence in the economy. Now these comments guys are clearly hawkish and obviously used to prepare the market for some sort of change coming up at the Bank of England. Now, he also shared with us that the reason why he didn't vote for a rate hike at the latest meeting was because of the chance of economic slowdown and weak wage growth. Now this is interesting, and we should keep an eye on these two things because these are the two same reasons that the head of the bank, Mark Carney, told us that now was not the time to raise interest rates. He said to us that given the mixed signals on consumer spending, business investment, and anemic wage growth, now was not yet the time to begin an adjustment in monetary policy. And of course, given that he's the head of the central bank, the pound dollar on Monday tumbled and has kept the pound dollar in a firm downtrend ever since. Now let's take a look at the charts for the pound dollar as well for the euro pound. Now this is a daily chart for the pound versus the USD, and if we flip to a 4-hour, you can clearly see that the trend is bearish below 128.29. This is a level that was initially created on the 16th of June, and you can see that this whole zone here is a lower high compared with the high created here on June 8th. Now the market bounced yesterday at midday on Haldane's comments, but since then pulled back, and it has to do with the fact that the head of the central bank, Mark Carney, obviously has more power, or at least that's what the market thinks, above the decisions at the Bank of England. And because of that, the market in general are, looking at the comments that Haldane told us, and they push price up higher, but they're not 100% convinced that it's time to work with the idea that we have actually bottomed out in the pound. I haven't, and again, technically below 128.19, the market bounced up and could continue to move up higher, but eventually it does look like it's set to continue to decline in the days ahead. Now for potential targets, we have the 125.70 level, which are resistance levels here from earlier this year, and then you have support here from the April 12th low at the 124.78, followed by support pretty much here at the low of April 10th, really, that could act as support for the pound. And these levels again are targets as long as trade below 128.19. Looking at the euro versus the pound, the trend here remains firmly bullish. You might remember when we did our update a few days ago, we said that on a pullback maybe to 87.60 or so, the market could see this as an opportunity to go long, and that the trend was bullish above 86.45, which is a low here created on June 8th. And as long as we trade above this level, this market could continue to head up higher, because you can see here we cleared the high here from March 13th and the high from June 17th. Because we breached these two levels, it's likely that the pound is gonna, that the euro pound is gonna try to target the high here from November 2016. If you look at this from a short-term perspective, we already missed the opportunity to go long. It's only if we actually pull back to support, so that will be 87.43 or so, that this becomes interesting from a risk-to-reward ratio perspective. And that's it, guys. That is today's update. Don't forget to subscribe to our YouTube channel for more videos like this. Thank you.